Well, yesterday we heard from Beth Traverso talking about a seven-figure house in King County, aka Seattle, getting 20 offers. We're going to talk to Matt, the mortgage guy, about a San Francisco house, which of course has to be completely the opposite story because we all know how bad San Francisco is. We're going to talk about some 80s vibes coming from the housing market, a la Ryan Lundquist. And of course, we will talk about what's going on with refis and break evens. Mr. Mortgage Guy, Matt the Mortgage Guy, how you doing? What's going on in San Fran?
I'm doing good, man. And I always like a good story. I think it helps provide some context to people. We talk about the housing market being competitive. We talk about low inventory. No better way to illustrate it than to give you a real life example. And the cool part about these conversations and, YouTube and the internet in general is we're not talking about things that happened 3 months ago. I'm talking about an offer that went out yesterday, a conversation I had 42 minutes ago. And so here's how it went. 3-bedroom, 2-bath, 1,500 square feet. I'm not an expert in all the neighborhoods of San Francisco, but I think in the description it talked about being a couple blocks from Golden Gate Park. So maybe it's a desirable area. The house, quite honestly, isn't that special. But it is something that clients that I work with and that are one rental at a time followers like. It's got the ability to kind of convert into 2 units. So it's desirable for somebody who's looking to make it more affordable or generate income. So it's listed at 1.1 million. The Zoom call I had yesterday with the real estate agent and the clients, we're having a Zoom call, Mike, and the agent wants to know, Matt, how certain are you? I've already submitted this thing and got an underwrite on it, so I know the loan's not going to fall through. He's telling me in order to have even a shot, we've got to remove loan contingency. Guess what we wrote at, Mike? Offer-wise.
Oh, I don't know. 1.11. You went just a tick over.
1.4.
Oh, shit.
It gets better, Mike. It gets better. Removed all the contingencies, wrote it 1.4, told him I can close it in 18 days, which, we've got another 18-day close in Walnut Creek at 1.9. Different story. This specific one, when I follow up this morning, Mike, we didn't even have a shot. 2 cash offers, higher than ours.
Wait. So this little know nothing house in San Francisco comes out at 1.1. Your buyers want it bad. They offer a 1.4, remove contingencies. You find out less than 24 hours later, they had no shot at 1.4.
Multiple cash offers above the 1.4 mark was what was communicated to the agent. He said, Matt, it'll probably be 1.45, 1.475 cash.
Well,
it blows my mind too. It blows my mind too.
That hurts my head. That just hurts my head. Let's play a little what if game. Let's just play what if for a minute. We both know, and we were screaming, they can go back and watch our playlist, November and December. Let's say this house came on in November and December, slow, rates a little higher, right, before they came down. What does your gut tell you? And again, this is pure gut opinion. Take it with a huge grain of salt. But do you think this gets...
Well, you know what's funny? Yeah, is knowing what I know, and I'm literally in real time looking, and I'm like, man, that's a really nice. There is like what I would consider a comp that is 1 block over, beautiful, and like the one they offered on. I hope they never listen to this. It didn't look pretty. I mean, sure, from an investment standpoint, they can cut it into 2 different units. Sold in October, Mike, for 1.25. 3-bedroom, 2-bath, 1 block over. And so, this is something that it's not everywhere and it's not every house in every neighborhood, but it's competitive. There's not a lot of real estate for sale. And, newsflash to anybody watching, people want to buy real estate. And there is so much pent up demand. It's going to be a crazy year. It's going to be a crazy year in real estate. I just know it. I hope, and I mean, not every scenario is going to be this ludicrous, but in some areas it will. And even when it's not this ludicrous, buyers need to understand. I made a video about having realistic expectations. You're not getting sweetheart deals. And really, if you're buying a primary residence, you don't necessarily have to look for a sweetheart deal. You're not just going to go out and pay any price for any house, but just understand that, you know, if you're going out there and you're buying your first house and you're looking at stuff at between 550 and 575, whether you pay 560 or 580, if you own the thing for 20 years, I don't think it's going to matter, quite honestly. But don't have an expectation that you're going to go out there and find that house for 525 just because somebody got it in November for 525.
This is why I called on December 14th, or maybe it was the 17th, the spring selling season started. I just saw it coming.
Yeah.
I don't know how else to say it and keep it slightly politically correct, but this sucks. This sucks.
It really does. And if listeners haven't checked out SacramentoAppraisalBlog.com, I might be more partial to it because I'm in Sacramento, but Ryan Lundquist puts out informative stuff. He's got graphs, and quite honestly, like, it's interesting to me. Like, if you check that blog out, Mike, that he put out yesterday, he's got clips from the Sacramento Bee from 1980 and 1981. And it's like, oh man, this, if we took the date off, could well describe where we're at in Sacramento, a lot of parts of California today. Like one of these headlines, California faces still worsening housing shortage. And, you know, they talk about a sales slump and 79 to 80 year over year, March to March, down 32% in transactions, right? A transaction crash.
Not price.
As prices were going up. And yeah. And so a lot of this stuff, Mike, it feels like and then, you know, there's article from 81 that I'm looking at that's talking about the search of the affordable home, right? Pent up demand waiting to be served. You know, there's a huge group of baby boomers from the 50s and they want housing.
Yeah, they were 30 years old in the 80s.
It's challenging.
Yeah. No, this,
right. And so
I mean, I made a call a couple of years ago that we were going to repeat the 80s. And it's happening right in front of us. And the reason that 1981 is important, whether you like it or not, it's still a fact. 1981 was the least affordable year to buy a home ever. And prices went up.
Mm-hmm. Yeah.
And we're having the 80s again. 80s on repeat.
Yeah. I hate to be the bearer of bad news because I root for the buy side. But people have this, I see this so much, Mike. It's one of my pet peeves, I'll be honest. People pointing to unaffordable, so home prices must come down. like you said it. It happened in the 80s. We saw unaffordable, prices still went up. And so to say that, like, I saw it again somewhere else. I think maybe somebody even commented on one of my videos. In order for it to get back to this level, prices need to come down, or rates need to come down, or, wages need to go to here. Says who? Says who? Well, they're like, the universe just says Billy, Joe, and Sally, you know, it's unaffordable to them. So voila, magic wand. We're going to make those things happen.
No, it's funny.
Not how it works.
No, Lance Lambert from Resi Club put out I don't know, I guess a tweet or a message. I don't know what they're called. A tweet, I guess. Basically saying, in order for us to get back to 2019 affordability, I'm going to go from memory, so I'll be off, but the story's there. Prices fall 40%. Interest rates go to 2%. Incomes go up 37%. Those are all mathematically true, but nowhere is it written that housing has got to go back to 2019 levels. And more importantly, it doesn't have to go there quickly. And that's what the 80s taught us. I mean, I keep screaming we're going back to the 80s, folks. I think we could have, relatively speaking, flat housing prices for 5 years. That'll eventually get back because rates will come down a little, incomes will go up. It will get more affordable slowly, right? There are people talking about a 10% housing crash. Here, let's put this out there. One of my biggest pet peeves is anyone who says we will have a 10% housing crash nationwide in a single calendar year. Why is that a particular heartburn for me? Well, I have done the research, and the largest national housing crash we have ever had in a single year was negative 8.9%. And that was when the problem was housing. So anybody that wants to talk about a 10% national housing crash in a single calendar year doesn't understand history. Now, could you have a 10% crash over multiple years? Sure. Anything is possible. But in a calendar year, it just bothers me when people speak nonsense.
Yeah, and I mean, a lot of the stuff that people point to would require a mass flood of inventory, even if the economy struggled and people struggled. There's just things in place, Mike, that will not allow
Yeah,
mass flood of foreclosure inventory to hit. Like they
they're
just
not
won't allow
doing
that
that
many
again.
people to foreclose. And
Yeah.
and by the way, people aren't in the risky loan types that are going to foreclose at the level that we saw during that one period across the last 100 years, where you could actually see national housing prices go down 8%. So I guess my thing to people is I'm empathetic to those that struggle because affordability is a problem, and these are all issues. But to those who want it to be better just because it will be easier, or hope that some magic, event will happen to just voila, it's better. I don't want you to hold your breath, because
Yeah.
it's just not very likely to happen. I was going to ask you something, Mike, because the 50-year spreadsheet well, and I haven't looked at it. So you probably know it off of memory. If you look at like the 80s and 90s, where did that affordability index get, quote unquote, good?
It got increasingly better from 81. It got to be, I guess you would call it good in the late 80s, 90s. But here's even a better question, because you're in the housing market. There's agents probably listening to this. Here's a question for you. We had peak housing transactions in 1978. Let's call it, I forget what it was. Let's call it 4.8 million. We then go on a rate increase for a while. How many years do you think it took for us to get back to and exceed the 1978 peak? Do you have a guess for transactions?
For transactions, the way you phrased it, see, like I'm a reader of people. I'm a poker player. So just the way it was phrased, I know it's a long time. So did it get back by the late 80s?
94.
Woo!
16 years. We could be down at the bottom of transactions, bouncing around for a decade. So where we are.
When like, this is a question for you then, considering where we're at, bouncing around the 4 million annualized transactions, when do you think we get to 5 million?
Ooh, 5 million. So again, 5 million existing home sales. So we exclude new home sales. 5 million. 27, 26, 27, 2026, 2027.
Okay.
Yeah, it's not
And
this year.
what were existing home sales 20 and 21?
I think
Like
21 was like
6?
6.6, I
Yeah.
think. Yeah.
So that might be a decade and a half, like we saw before.
Yeah, exactly.
If it ever gets there, because of, those were
Well, just
wild
think about the
times.
population. Think about the population increase in 16 years. I mean, it's just nuts. Yeah.
Yeah,
So
I
let's
know.
switch gears. What about refis? We've seen rates come in. We're seeing, I don't know if you saw it today. I'm sure you did. Purchase demand's up 8% week on week. Refi demand actually down a little bit, 7%, I think, week on week. But what's going on in refi land?
Yeah, that's an interesting thing to talk about. 3 weeks straight as we enter 2024, we see application demand up. Refinance demand is down week on week, like you said. I'm having interesting conversations. And this is always my take is, what am I hearing? What are people telling me? And people are looking at a refinance transaction, and instead of saying, this makes sense, they're saying, but what if I wait?
Mm,
And, to people out there, I want to be careful in how I advise, because you don't want to just, you especially don't want to talk to a salesperson, just take their word for it. Yeah, I should refinance. But you want to not always count on things playing out exactly perfect for you. Example, you've got a refinance that saves you $500 a month. And based on whatever the parameters are, true cost to you is $6,000. That might be title fees, that might be some lender fees, whatever the case may be. You can look at that and say, there's a 12-month break even. If I'm, in this loan for 12 months and it's saving me $500 a month, but I'm baking in 6,000 in cost, it's a 12-month break even. Could rates be lower in 9 months? Yes. Could they be the same? Yes. We don't know. I don't know if you're going to stay in that loan for 9 months, 36 months, or who knows, like 5 years. And so people are pressing pause. Oh, if it makes this much sense now, to make even more sense 3 or 6 months from now. I
yeah.
believe rates are going down.
Yeah.
I just don't know how much they're going down and how fast they're going down. We've seen changes already where,
Yeah.
we were all dead set that the Fed was going to, cut in March. That's off the table, right? And so my word of advice to anybody listening is, if a refinance makes sense and you can recoup in the first 12 or 18 months, you're putting an insurance policy in place where if you stay in this loan,
Mhm.
you're in good shape.
Yeah.
And for most people, that
I just want,
$500 per
I,
month.
I just want people to hear it from me. I have said, and people can go back to years of videos, I've always personally used 18 months. If it's 18 months or less in a payback, and it's of course something I'm going to keep forever. I wouldn't do that on a flip project, obviously. Um, 18 months is my number. If I can save money and fix my debt, for 30 years, I'll do those but I won't do more than 18 months. I'm like, we'll see where we go. So 18 months has always been my
Right.
number. I think when we start giving squishy ranges, people start playing with numbers. For me, it's 18 months binary.
Right. Yeah.
Yes,
And
no.
and it's yeah, it's dependent on your scenario too. I talked to plenty of people that are, this is a house I'm gonna sell next year, or this is, for whatever reason, it's less permanent. But I
Yeah,
think
of course.
taking out the insurance policy of take it while you got it, and then worst case, you're in something that has a 16-month break even, and you refinance in 14 months, right?
Yeah.
And then you refinanced at that 14-month period because it was, a dramatic improvement. You're like, I'm gonna get this 499 while I got it, because for whatever reason, Q2 of 25 rates are great and you can do that. But
Hmm.
don't pass up on it just because you think it's going to get better. Because then what you might do, pay an extra $500 a month for 7 months and things aren't any better. And it's like, why'd you just put that
Yeah.
$3,500 out into the wind? The
Yeah.
big banks and the mortgage services, they don't need more interest from you. So don't pay it if you don't have to.
Yeah. The other thing we should talk about refis is I had a conversation with somebody the other day that listened to my rant about all the bullshit refis going on. And they were actually in a situation where if they were wanted to do it, the right answer was refi. So let me just give this example. This individual happened to have a house where they had a ton of equity. Let's call it $500,000. Their debt was 50 grand, right? They'd been paying it off for a while. They were almost done with it. And, they wanted to start a business. So they wanted to pay for this. So they wanted whatever, right? I'm not here to judge, but they wanted to go get a couple hundred grand. And they're hearing me rant and they're like, do you think we should go get a second? And they're telling me the seconds are like 12%, right? Or an equity line. And I'm like, well, you know, do you have the money? Are you expecting the money, right? Can you pay it off quickly? All of that stuff. And the answer is no. We're going to pay this off over the full term. And I was like, well, if that's the case, even though you have a, you know, 3% mortgage on the first, you're probably, now again, go do the math, but you're probably better just doing a brand new loan because again, it's math, folks. 3% on 100 grand or 50 grand, 3% on 50 grand versus 12% on 200 grand. You slam those together, your blended interest rate's like 9.5. But if you
Right.
just
Yeah.
do
Go
a
do a
brand
cash
new
out
loan,
refinance
yeah,
at
it's 6.
699. That
Yeah.
that's a great point. And I'll tell you with absolute certainty, the scenario you just discussed, refinance makes sense. And so that's
Oh,
where
yeah.
people, you can't take any piece of a mortgage advice, whether it comes
Hmm.
from me or anybody else, as everybody should do this, because
Yes.
it's specific to you and your scenario. What I will tell you is general advice. The bigger your first is, with a 3% or a 3.25 attached to it, the less likely it makes sense to do a refinance. You owe
Absolutely correct.
63,000. You're pulling out 250. Cash out refinance probably makes sense because those seconds,
Yeah.
they're a double-digit interest rate. If you come to
Yes.
me and you owe 652 and you've got it at 2.875, it's going to take an act of God for me
Yeah.
to tell you to refinance out of that,
Oh,
right? Because
that's
because even if you need 100 or 200, take it at 12% and
yeah.
leave the 2.875 alone at 6 point, at the 600 grand.
I
So
think that's a
it's it's
it's math, it's situational. I felt bad, right? I was so passionate beating up these stupid call centers for just hurting people. And I'm like, well, you know what? There's a couple of situations, couple of corner cases where the cash out refi is the cheaper and better option. So I felt bad not making that clear. But at the end of the
if they
day,
want
something
the
I know.
great advice, Mike, they just got to go to greatmortgagebroker.com.
There you go. That's what I was going to say. If you want to get advice, whether to do it or don't do it or run the numbers, greatmortgagebroker.com. Matt, I appreciate you. Thank you for being here every Wednesday.
Thanks, Mike. It was fun.